If this was true and Binance ultimately collapses, the detriment to the crypto markets would be massive. If we go back to the chart right now, yes, it was a good bounce yesterday. We're pulling back today a little bit, but we're still in this pattern formation. It is a bearish pattern formation. If these accusations are true, that's cataclysmic for the crypto markets. Then all of a sudden, the US has to start offering higher interest rates. You start offering higher interest rates, what's that going to do? You're now going to raise overall interest rates even more. Now you couple that with inflation, which is showing us that it's sticky, right?
Hello and welcome to Crypto Street. In this video, we have the privilege of featuring Gareth Soloway, who will provide valuable insights into the crypto struggle. Today, our focus will be on unraveling the secrets of Bitcoin's future. However, before we delve into our discussion, let's first examine the recent developments in the cryptocurrency market. Bitcoin and most major altcoins are currently encountering selling pressure at higher levels, but there is no evidence of panic selling at the moment. Interestingly, Bitcoin holdings on exchanges remain stable, unlike Ether, in light of the recent Binance and Coinbase lawsuit news. Now let's begin our enlightening discussion with Gareth Soloway.
Now, I want to get to Bitcoin, right? I want to talk a little bit about Bitcoin here. Bitcoin having a beautiful reversal yesterday. So essentially, you have to understand the metrics going on. 2 days ago, the SEC sued Binance, and they levied some really serious accusations. If these accusations are true, that's cataclysmic for the crypto markets. Now, what I find fascinating here is you essentially have a market that yesterday rebounded and negated that move. Now, to me, this is an interesting dynamic, and I'll tell you the dynamic that honestly makes me intrigued, is that you have a crypto investing public that essentially is saying, no, we don't believe. The SEC has lost credibility to the point that when they say that Binance was doing shady things with funds, we're not going to believe them. Because if this was true and Binance ultimately collapses, the detriment to the crypto markets would be massive. All right, so you have investors that are coming in and saying no. Now, granted, yesterday the SEC sued Coinbase. Now, remember, there's a difference here. The Binance stuff, the allegations were really bad. Coinbase, the SEC was just saying, hey, you're allowing people to trade unregulated securities. That's nothing new. We knew that already, right? The SEC had already said that, hey, listen, the crypto, everything but Bitcoin's essentially a security. Okay, well, if they already said that, then yeah, you're right. Coinbase is letting people trade unregulated securities. So I think that's one of the keys is also when people started to realize that, that's when they got to a point where they said, all right, shorts started to cover, you saw a little push up, and now we're popping up. Now, but if we go to the charts here, what I wanted to talk about here is the chart basis. What is the chart telling us? Because that's all news. And you guys know, yeah, I pay attention to news. I think even technical analysts and technicians need to know what's going on with the news. But what we need to do is say, what is the chart telling us? And the chart's very simple. The chart is saying that right now we are holding this area of support. And I want to draw a trend line in here. As long as you hold this general area, and if I put a line through this low right over here, we can clearly see that we closed that down day on Binance right at that level. We then rallied back up. So we're stuck between a range. Now, this is your upside resistance, very clear right here. This is your downside support. If support breaks, we're going to 24,000. That's your next target. Excuse me. All right. Now, if we go to the upside, this is your resistance. Now, if we get over this 28.3 level, we're going to head back to 30,500, which is the top. And I called that. And again, lots of people were doubters. There were so many haters out there talking about, oh, 30,500. It's now a breakout. It's going to 100,000. The charts are the charts, folks. I go with the probabilities. Everything I look at is always based on probabilities. There's no emotion. There's no nothing. It's what are the charts telling me? I translate that into probabilities. The bottom line is, if we go back to the chart right now, yes, it was a good bounce yesterday. We're pulling back today a little bit, but we're still in this pattern formation. It is a bearish pattern formation, meaning that the chart is telling us that there is a slightly higher probability to downside still. What would change that? If we get above this 28.3 level. We get above 28.3, it opens the door to retesting the highs. The highs would be resistance. but that at least would open the door to it. And again, this is just, it's unbiased. It's just, that's what the charts say. You can be one of those people that lives on hopium, that's fine. Or you can be someone who is a realist and a logical thinker. Those are the people in general that will make money in the markets.
Over the past 2 days, Bitcoin and altcoins have experienced volatility due to the actions taken by the SEC against major crypto exchanges, Binance and Coinbase. This news has caused initial reactions in the market, followed by a rebound. However, it is expected that the markets will enter a range as traders assess the uncertainty surrounding the lawsuits. The positive aspect is that the markets have not collapsed, demonstrating the increasing maturity of the crypto industry. Notably, data from Glassnode indicates a decrease of 12,600 Bitcoin from exchange balances on June 5 and 6, suggesting that traders have remained composed and avoided panic selling, unlike the FTX incident in November.
I want to show you the Ethereum chart here, guys. The Ethereum chart, by the way, you're stuck within parallels. Now, parallels are one of the most powerful things out there. If you find parallels, you will find parallel after parallel after parallel. Look at this. So we're basically, again, stuck in this parallel between these parallels, bouncing above and down. We were stuck over here in a parallel, and we went up to this parallel up here. Same thing applies. This is a bearish consolidation pattern off of this down move. All right, that means that probabilities for this parallel dictate that there's a higher chance of a move lower than higher in the near term. If we get above this line, then you open the door to go to the next line. By the way, technical trading isn't about being a major bull or a major bear. It's about relying on the charts to guide you. It's about being able to flip when you hit support to go long, when you hit resistance to go short. That is the true nature of it. And again, it's very hard for us as humans to understand that because we are emotional creatures. We get in a trade, usually with too much money, and we become very invested in the success of that. We dream about the millions of dollars we can make. But ultimately, that is the downfall of 99.9% of investors. They fall in love with something. I always say this to my traders, folks. Only love things that will love you back. If it loves you back, go for it. In general, is a chart, is a stock, is a crypto going to love you back? No, absolutely not.
Bitcoin demonstrated resilience as it bounced back from the crucial support level at $25,250 on June 6, indicating a strong bullish defense at that level. However, the recovery is currently encountering selling pressure near the moving averages. The bears are likely to make another attempt to push the price toward $25,250, which remains a critical level to monitor. A break and close below this level could potentially pave the way for a further decline toward $20,000, potentially delaying the initiation of the next upward move. On the upside, it is expected that buyers will aggressively buy any dips in the zone between $25,250 and the support line of the channel. For a bullish signal, the price needs to surge above the resistance line of the channel, signaling the end of the corrective phase. If this occurs, the BTC/USDT pair could rally toward $31,000. Ether experienced a dip below the resistance line of the falling wedge pattern on June 5. However, the bears were unable to capitalize on the downward momentum, indicating demand at lower levels. The bulls managed to push the price back above the moving averages on June 6, but encountered strong selling pressure from the bears. The sellers will likely attempt to push the price back into the wedge, potentially leading to a further decline toward the support line of the wedge. On the other hand, if the price rebounds from the resistance line of the wedge, it will indicate that the bulls have successfully turned the line into a support level. To confirm a bullish momentum, buyers will need to drive the price above $1,928, which could pave the way for a northward march towards $2,000 and eventually $2,200. Thank you for watching. We appreciate your support and engagement. Your insights on the future direction of the world of cryptocurrencies are highly valued. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.